Probably the most common question that I've received from investors at all different experience levels is, should I be investing in stocks or ETFs? Now, given my background having worked for Vanguard, my initial response would always be investing in ETFs. That's also how I started investing. But I heard a pretty solid argument the other day for owning individual stocks instead, and it had me thinking. So today I want to discuss with all of you the advantages of investing in ETFs or stocks for your portfolio. Hey everyone, and thanks for joining me today. My name's Matt, and before we get started here, I just need to say, not advice, just for your entertainment purposes only, so don't make any investment decisions based solely on what I have to say here. Also remember, if you like this video, it is a 5-cent donation for charity, and if you subscribe, that's a 10-cent donation for charity as well. So keep that in mind as you're watching this video. Now for this video, I really want to explain why investors might choose stocks or ETFs to put inside of your portfolio. And I want to say the reason why I always started with ETFs is because, well, not to date myself, but I started investing before you can buy fractional shares of companies. So if you wanted to own a share of Amazon, you would have to pay the $1,000 or whatever it was trading at back then to be able to have that one share of ownership. Whereas an alternative, I had the ability to buy an ETF, which maybe was trading at around $100 a share, but got me exposure to the company that I wanted, as well as multiple other companies. So it's a very quick way for me to get exposure into multiple companies and ultimately diversify a portfolio without having to put so much capital into my account. If you need further clarification on ETFs as an investment vehicle, I made a whole video going into detail about ETFs, what they are, how they perform, all that good stuff. So I'll link to that at the end of this video, so definitely make sure you need to check that out if you do have any questions about ETFs. To start, I wanted to go over just a quick chart that I made showing the differences between ETFs and stocks as an investment. Now, as I kind of mentioned earlier, when you buy an ETF, you're buying a basket of multiple different stocks, where when you buy an individual stock, you're only getting one ownership or one piece of ownership for one company specifically. So for this one, we'll have to give the point to ETFs, given how quickly you get exposure to multiple companies with just one purchase. Now, when it comes to a holding cost, this is where stocks actually have a little bit of an advantage because there is no management fee or an expense ratio with what we see with ETFs. Now, sometimes that expense ratio for ETFs can be very minuscule and something you might not even notice with your account, but it's something that you always have to pay attention to when you purchase an ETF, and that's just what gives stocks the advantages here. As just a quick general rule of thumb, when I invest in ETFs, I really like to keep my expense ratios below 0.5. Really, the only time I make an exception to that is with ARK funds, who is usually around 0.75 for their expense ratio. The good news is both of these investment vehicles have the ability to provide you a dividend if you're looking for an income-producing investment. And this really goes for growth as well. You can buy an ETF that is a growth-focused ETF and invest in growth companies. You can also buy an income-producing ETF, which invests in dividend-paying companies. So both of these have the ability to help match or meet your investment objective, whether you're looking to grow a portfolio or receive income through it. Since ETFs trade the exact same way that stocks do, the liquidity factor for these is exactly the same. Usually you just have to wait the 2 to 3 days for it to settle in your account, and then you'll be good to go. You can have that money ready in cash. So liquidity shouldn't really be an issue for either of these investment vehicles for the most part. And lastly here, with taxes. Since again, an ETF trades just like a stock, the taxes are going to be the same. So if a ETF grows from $10 to $20, it'll be taxed the exact same way that a stock would. And same thing goes for dividends being paid out. You'd have to treat the tax consequences as those exactly the same. Now, with that said, though, if you do have further questions on the tax consequences of either stocks or ETFs, I'm not an accountant, so my advice is to go speak to an accountant so that they can help clarify that for you and give you the information that'll be most beneficial for you. So when we compare the two investments like this, it looks like there's not really a huge difference between these. One gets you immediate diversification, the other one just doesn't really cost anything to hold on to. So what I did is I made a graph to show you the performance between Vanguard's 500 index and a few other stocks that are commonly traded to show you the growth between 1 year, 3 years, and 10 years. Now you should see this graph here on your screen, and there's a lot that we were able to take away from this. If you're wondering, the companies I chose were Starbucks, Walmart, Coca-Cola, Disney, and Cisco. Really no rhyme or reason behind that. I just chose those because they are commonly talked about companies for investments. But as you'll see, VOO is Vanguard's 500 index fund. It tracks the S&P 500. It's never the top performing stock throughout these time periods, but it's never the bottom performer either, meaning it really sits right in the middle of the pack when it comes to the investment performance of this, regardless which time frame we're looking at. And as an investor, I really believe that if you can be an average investor, meaning that your investments will average what the market has been able to provide, then you'll put yourself in a very good position. This is actually something that a lot of fund managers struggle with, or active managers struggle with, is actually keeping up with the market itself. This doesn't really help us though with the answer of what is going to be a better investment for you. Well, the argument that I heard the other day for stocks is that if you buy the right stocks and hold them for a long time, and when I say a long time, I'm talking like 15, 20 years, then you do have the ability to have that focused growth in one company, assuming you pick the right company. Where ETFs, you just really do get that average return over the long haul, which could be a good thing and much more simple, but you might not get to experience the growth like what you'd see here if you held on to Starbucks for the past 10 years. So how can you use this information to your advantage as an investor? Well, again, this is not advice here, but my initial thought process is always make sure you have some kind of diversified position inside of your account. Now, for most people, that'll be just fine. Buying the market is a totally fine strategy, and if that's all you do, your portfolio will have benefits with it. But I know a lot of people out there are still interested in buying the individual stocks. So what I'll say there is if you do want to buy the individual stocks, first off, make sure you've done your research before making those decisions and purchasing that investment for the long haul. Each week when I do my Watch This Wednesday videos, it takes me about anywhere from 2 to 4 hours, give or take, on the research aspect for those companies. And that's just for the one stock specifically. Now, I've been doing that for almost a year straight now, so I've been able to do that a little bit faster than when I first started. When I first started, it would probably take me about 10 hours of research before I made a decision on a company for my Watch This Wednesday videos. So if you're new to this, expect that it's going to take a long time, but that's the research you'll need to do if you want to be an individual investor or an individual stock investor to make sure you make the right decisions, again, for the long term. Now, one thing I would also suggest is if you are going to pick individual stocks, I personally believe a great strategy is having what we call a satellite portfolio. And simply what that means is you use something as the anchor in your portfolio. In this case, it would be VOO, or the 500 index fund, because that is the market. So that'll at least be a base for your account to work off of. That way, if you have any really bad years, you at least have that anchor to still help keep your portfolio afloat. And from there, you would have the ability to pick and choose the individual stocks. So if you were to buy VOO 10 years ago and then also buy Starbucks 10 years ago, your portfolio would be in a great position. Same thing with Disney. But as we could see, if you were to buy Coca-Cola 10 years ago with VOO, it might not be the best performing account, but it would help to have that VOO in there to help offset any underperforming positions that you might have, if that makes sense. So what this all boils down to is if you don't have the time to invest and really spend a few hours researching stocks before making that decision, then just stick with ETFs until you feel confident in your abilities to research companies and understand what their advantages are or how they compare to the market. An ETF will be just fine for you. If you are confident in your ability to research these companies and make individual stock investments, then my suggestion there is to utilize a anchor in your portfolio, whether that be something that tracks the Dow Jones, the S&P 500, or even the NASDAQ, because that way you have a bunch of other companies to help offset any potential bad years that you might have in your portfolio. Because if you do go fully into just 100% individual stocks, yes, of course your portfolio will have the ability to do fantastic, but the odds of that aren't as great as if you have something anchoring your portfolio to really help balance out the returns. I hope that you found this video helpful, and if you have any further questions about whether you really need to invest in stocks or ETFs, leave that in the comment section down below and I'll happily address that for you. If you like this video though, I hope that you consider giving it a thumbs up or hitting the like button for a 5-cent donation for charity, and if you haven't subscribed already, I just ask that you consider doing so. It'll be a 10-cent donation to charity, and it gets me excited to continue making more and more videos. So all that said, I gotta wrap up here, but thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world, but you're right here with me, and I really appreciate that. But I'll let you go ahead, enjoy the rest of your day, and I'll see you next time.